Now, did you know there's approximately 38 million people in Canada? There's approximately 1.7 million mortgages. It's one of the largest purchases that we will, as Canadians, will ever make in our lives. And there is such a little amount of information on the rates and what's going to happen. And there is information out there that tells us exactly what's going to happen in the future, and nobody watches it. So today I'm going to show you some clips from one of Sharon Kozicki's recent speeches, and I'm going to break down for you what's happening with our economy, what's happening with mortgage interest rates, and how you can save yourselves a boatload of money on your largest asset. Hey everyone, welcome back. My name is Levi Woods. This is Drawbridge Finance. This is an opinion channel only about money. Now, today we are not talking about the stock market. I wish I was. The market has been amazing. We're just like coasting along and making an absolute killing. For my patrons, you guys all know, last week we absolutely smashed it. The Drawbridge 100K challenge just beat our 11% weekly goal for the fourth week in a row. Last week, returning 22% in a single week on those specific options trades. But as I said, we're not going to talk about that. We're going to talk about mortgages today. Now, if you've been a long-time subscriber, you know that I have made some very controversial videos about mortgages in the past. I live in an absolutely stunning home. I love it to bits. And I have enough money that I could pay off my home and pay off my mortgage if I wanted to. But for me personally, I actually value having more money than having no mortgage. And I know that that's controversial, but it's the way that I got to the place where I was, or I am, as a 39-year-old retiree who helps people make better financial decisions. So if you're watching this video and you're thinking, well, what can I do to get where you are? This is exactly the video for you. Now, today we're going to talk about a little bit of a speech that happened last week from the Deputy Governor of the Bank of Canada, Sharon Kozicki. Now, you've probably never even heard of her. Her speeches get almost no recognition. When I look on YouTube right now, even though the video's been up for over a week, it only has 1.2 thousand views. Now, I'll leave a link down below if you guys want to watch the whole 45-minute video, but today I'm going to go over the Coles notes because I think it's super important.
The bank has been clear that higher interest rates are needed to bring inflation sustainably back to the 2% level.
I have both Canadian and American followers. I want to show you that here is the rates from the last 25 years. This is over at Trading Economics, and this is the Bank of Canada's 25-year chart. And we can see that interest rates down here are at a massive low. And what happened in 2020 during the pandemic was that we saw a dramatic reduction in rates. Now, we also saw this same reduction in the American rates.
But in Canada, as in the United States and other major economies, the responses were both rapid and intentionally massive.
I absolutely love that statement, intentionally massive.
The bank lowered its policy interest rate to the effective lower bound of 0.25%. And we said we'd keep it there until slack in the economy was fully absorbed.
They know what they did was huge. They gave us an opportunity, and I took advantage of it. I refinanced my mortgage and got a better deal, and I have this 5-year fixed mortgage now. And I'm going to talk about that a little bit later, what we can do to make the best decisions right now with the current information. So this reduction in early 2020, and these rates have been sitting at a super, super low valuation. I took the two charts and I blended them together, and we can take a look at this comparison between the blue line, which is the United States, and the red line, which is Canada. And you can see that we actually had in Canada a little bit higher rates for most of the last decade. Now, both of them have recently increased that rate by 0.5%.
With slack in the economy absorbed, we raised our policy rate to 0.5% in early March. And we also said we expect it will need to rise further.
The Fed interest rate decision in middle of March, the forecast by Trading Economics was 0.5%, and the actual was 0.5%. And we can see this little blip, but it is everyone's belief that these rates are going to go up. If you look at the Canadian ones, the forecast right now for the April interest rate decision is that the forecast is going to be 0.75%. Now, I personally don't think that it's going to be that high. I actually think it's only going to be 0.5%. And let's see what Sharon has to say about this.
The labor market has recovered from the effects caused by the pandemic.
And with that, it's done. We've already seen the bottom. Now there's only one place to go, and that's up.
The uneven impacts have also largely unwound. For example, the pandemic-induced gaps between employment outcomes for women and youth versus other groups have dissipated.
And this is also fantastic news. I was just talking to my brother about this recently. They're hiring a ton of people. He works in architecture, and he was just, kind of complaining that the new hires are getting just as much money as people that have been in the business for a very, very long time, straight out of school. Now, my personal belief on that is that's great. It means that young people actually have the ability to get into the housing market, and it allows them to be able to spend that money, and that's going to help prop up our economy.
Rising interest rates will have an immediate impact on new home buyers. They'll have a more gradual impact across existing homeowners. This is because increases pass through only gradually to the pool of existing homeowners.
Now, this is absolutely key. If you're in that situation where you know that your mortgage is coming up, this is when you need to evaluate your mortgage. Now, how do you do that? Well, there's ways you can do it. You can go online, you can try to find mortgage calculators. I have built mortgage calculators, and I'm in an interesting spot because I've been actually doing this so long and building tools that are so complex and unique that mortgage brokers reach out to me and they actually purchase my tools so that they can then help their customers, which is awesome. And I mean, I love that I'm in that situation, but I really love this stuff and I wanted to make it my goal to be able to save people like you money. So I have those available. I charge a very, very small fee, and that just goes back into producing these videos. And that's the way that I'm able to continue to make these videos. So if you're interested in checking out some of the mortgage calculators, go over to my website, drawbridgefinance.ca, check them out. If you're not sure which one is right for you, you probably only need one of them. You either need like a refinancing comparison, or you need, simple interest versus compound interest. There are a couple of different ones. There's just descriptions of all of them. There's watch through videos on all of them. And if you have any questions, just reach out. Once you've watched the videos, you can clarify with me before making your purchase. And then, check it out, because it's amazing what the banks are trying to do. They're trying to take as much money from you as possible. And if you go in with the information in hand, it's easier to make decisions.
Almost 3/4 of mortgage holders in Canada have fixed rates. Most of them are on 5-year terms, so in a typical year, only about 20% have to renew. And people renewing over the next couple of years will likely get rates that are similar to what they're paying now. This is because increases to our policy interest rate about 5 years ago were offset by decreases in 2020 after the pandemic struck. As well, most variable rate mortgages have fixed payments.
Now, fixed payments are a pretty interesting thing because the banks are actually protecting themselves, so they keep charging you more. When the interest rates drop, you have a variable rate mortgage, and what ends up happening is the rate is lower, but your payment stays increased, which means that you're actually paying down more principal during the time of lower rates, which is beneficial to you in the long run, so to speak. I mean, if that's what you're trying to do, save money on a very, very low interest product, not really the way I like to operate, but that's the way the banks do it because they are protecting themselves. Now, what that also means is that if you're on a fixed rate variable, the interest rate or the payment rate is not going to actually increase over time as these rates increase, but it can only go so far. So you have to look into the details of your current mortgage to actually see whether or not that payment will increase, because it can. For the Americans, especially if you're in a variable rate mortgage, then those rates going up, absolutely, that is going to affect your payment schedule.
I expect the pace and magnitude of interest rate increases and the start of QT to be active parts of our deliberations at our next decision in April. It's important to be clear, returning inflation to the 2% target is our primary focus and our unwavering commitment. We have taken action and will continue to do so to return inflation to target, and we're prepared to act forcefully.
I think this is the biggest key here. She just said they're prepared to act forcefully, and she almost said it under her breath, but we cannot take this lightly.
Our primary concern is high inflation. The bank will use its monetary policy tools to return inflation to the 2% target and to keep inflation expectations well anchored.
Now, of course, I don't offer advice on this channel, but if I was American and I had a mortgage, I would be looking for the cheapest possible rate I could get, and I would be renegotiating. There's typically no fees with breaking a mortgage in the United States, and these levels are never going to be as low as they have been, and because they are at historic lows, and the economy is very strong, and the interest rates are going to be rising. Now, for Canadians, it's a little bit trickier. We have to deal with the term. So we get to lock in on, 1, 2, 3, 4, 5 year, 10 years are pretty rare, but locking in that interest rate. Now, for me, I'll tell you what I did. We actually locked in a 5-year interest rate. Now, I did it before this 0.5% bump up, but I wanted to get at least 5 years of this ridiculously low rate. And that way, at that 5-year mark, I can make a decision whether or not to pay off my mortgage in full with no penalty, or I can renegotiate at a lower rate and decide at that time whether or not I want to keep a mortgage going forward from that point. Now, the nice thing about it, if I do decide to move, I can port this mortgage over. So I am never in fear of having a 5-year term, because if I lock in that rate on the fixed rate, then I have the ability to move that over to a new mortgage, as long as I'm planning on maintaining a home or owning a home for at least the period of that term, which in my case is 5 years. Now, if I was in a situation where I was renegotiating my mortgage, or I knew it was coming up within the next year, I would be getting on the phone and I would be phoning brokers and making an appointment with my bank before the middle of April, because I would want to lock that in on paper. Now, in Canada, we can get a 90-day guarantee. We can go to the bank and a lender will actually give us a piece of paper that says they guarantee that rate for 90 days. And I would get that in writing so that I can make that decision even if the rate goes up, which it's likely to do. And I know that you guys are probably wondering about variable rate mortgages. I personally would not be signing a variable rate mortgage. I had one for most of the last decade, and the rates were going up and down, as you saw from that chart before, and it was great. I had some times where I was saving more money by having a smaller rate, and I wasn't so worried because the rates were already relatively low. But that's not the current situation. I would not in any way, shape, or form be signing a variable rate mortgage. They are very enticing right now, and with good reason. The banks do not want us to keep our money. Their best interest is making money for themselves. So they want to offer these, knowing that the rates are going to go up and they're going to end up making more money over time. But I totally get it. I mean, they're in the business of making money. I'm in the business of keeping my money. That's my job. Well, I hope this video was insightful. As always, I try to keep it short and sweet. If you have any questions, leave a comment down below. Give me a thumbs up, and we'll see you next time so we can all get rich together. Thanks so much for watching.